Ladies and gentlemen, welcome back to a very important update on AMC as well as the broad markets, because you are getting quote unquote meme stock specific kind of news with Bed Bath & Beyond that is spooking a lot of investors, that is causing this bearish sentiment here on the day, and for a good part, a fair reason. Bed Bath & Beyond is down almost 50% today. Does this mean that AMC has to continue on a downward trajectory over the next couple of days? I don't think so. I'm going to argue my point to that here in this video. Now, even more important than that, I think, you did have Fed Jerome Powell that made a speech today that was highly anticipated to be pretty dovish, and you actually seen the markets reacting very dovishly, very excited, right? Pretty bullish as Fed Jerome Powell was speaking today. But towards the last couple of minutes, the sentiment and the tone changed quite a bit, and it really sets us up for more volatility to come, specifically around economic data. So we're going to get into all of that and everything you need to know about AMC stock. Guys, if you learn anything here in this video, hit that like button and subscribe to the channel. Now, let's get into this information. So with Bed Bath & Beyond, it's wild what they're trying to do. So they're trying to raise $1 billion to shave off bankruptcy. Now, the wild part about this is the whole company is only worth $353 million. So they're essentially trying to raise like 3 times the total value of the company, which is causing the stock to go down about 50% here on the day, which I do think is quite reasonable, considering they're trying to raise so much capital relative to the whole market cap of the company. The initial reaction from this is causing stocks like AMC and GameStop and Lucid, some other stocks, to sell off quite aggressively, even though nothing happened with those other companies. So I don't think this has to be a systemic problem with these stocks, aka I don't think if Bed Bath & Beyond continues to go down, it means that AMC, GameStop, these EV stocks also have to come down as well. I think it's the first initial reaction. Yeah, it makes sense why these other stocks are down quite a bit. But does that take away the bullish sentiment for AMC? I'm not convinced of that. So there is that's the biggest thing affecting AMC specifically, and it has nothing to do with AMC. Now, at the same time, you just had Fed Jerome Powell. Oh boy, where do you even start with this one? So this was a pretty long speech, and there was a lot of bullishness in this speech. Like, most of the speech was very bullish. And if we take a look at the S&P 500 just briefly, you could see the markets were going straight up off of this. And then really towards the end, the last couple of minutes, the Fed said something very in particular that the markets did not like. So this article says Fed Chair Powell says inflation is starting to ease, but interest rates still likely to rise. Federal Reserve Chairman Jerome Powell said Tuesday that disinflation has begun but is going to take time. Markets latched onto Powell's words and briefly turned positive before flipping back to negative after he cautioned about stronger than expected economic data. And this is the key. In quote, if we continue to get, for an example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than is priced in, he said. So he's kind of confirming yet again that the good news we get as far as economic data will be bad news for how high the Fed has to raise rates. Now, he threw in there, if we get high inflation reports, right, if inflation ticks up in the next reading that we're going to get next week, that's going to be really bad. At the same time, we've also been getting really good economic data points, which would be bad. As of recently, the markets have been rallying so much because we're seeing these good economic reports that are good, showing potentially we're going to get a soft landing. And then we have inflation coming down and the Fed getting more dovish. So the odds of a soft landing have definitely started to increase over the last couple of weeks, over the last couple of months. But now you're getting Fed Jerome Powell saying, yeah, if we look like we're getting closer and closer to a soft landing, like 500,000 jobs added last month would show you. Well, we're just going to raise rates. We're just going to keep raising rates at that point. At that point, the economy can handle it. And the markets are like, whoa, dude, inflation's coming down. You're going to crush the economy and put us into a recession, even though you don't have to. Most crashes that you have seen in history are kind of the Fed's fault, obviously, when it has to do with inflation. There's only been one soft landing in history. This is typically what the Fed does, and then drags the whole economy down. By the time they do that, it's already too late. So you're starting to get more, call it hard landing concerns here. And that's going to make the data points much, much more important over the next couple of weeks. So those are really the two big stories today that are causing fear in the market, specifically the Bed Bath & Beyond story with your quote-unquote meme stock sector. And Fed Jerome Powell, this is one that could stick for a while. This is like a reverse... It was like a reverse Jackson hole. He was very, very bullish until he said that. And I think that was a last-ditch effort to kind of put the market straight here, that you shouldn't just price something in and expect it to happen. Just because we're getting good economic data does not mean we're going to get a soft landing. We're just going to keep raising rates until we slow down the economy. So, not a good thing, right? Not a good thing. And it's completely changed the dynamic of the markets here today. Now, as far as AMC specifically, we know AMC is on the threshold securities list, and we'll talk about how many FTDs did have to be covered on here today, and what we have in store over the next couple of days. Now, as far as the face value numbers that we're getting right now, the live short interest of free float at 22.51%, 116 million shares that are sold short. Cost to borrow average of 319.22%, cost to borrow max at 380%, and cost to borrow minimum at 1.04%. Interactive broker short availability has us at 0 shares. Earlier, you were at 100 to 150 with a cost to borrow rate of 205%. So the cost to borrow max has come down quite a bit, but you're still at super, super high levels. Interactive brokers at 200% is kind of wild, because that's what people are actually taking out these shares. Like this 150,000 shares, it was lent out at 205%. That's expecting a lot, and that's going to eat into a lot of potential profits that hedge funds have in short positions, but it's highly disincentive to remain in a short position, especially if you do have profit. So I do want to highlight that for you guys. Even though numbers coming down a little bit, they're still astronomically high, and definitely hurting. Now, the interesting flow sentiment on the day has us at 83 orders totaling $29.3 million, positive order value of 8%. Now, what we have in store for tomorrow as far as economic data, it's not going to be a lot of economic data at all, but one very important piece coming out at 10 o'clock in the morning is the Michigan Consumer Sentiment Preliminary Survey for February. So this survey covers Michigan consumer expectations, Michigan current conditions, Michigan 5-year inflation expectations, and Michigan inflation expectations preliminary for February. 5-year inflation expectations, that's the longer term inflation expectations. You're expecting 2.8%. Last month was 2.9%. And for Michigan inflation expectations for this year, you're expecting 3.8% as the average consensus. Last month was 3.9%. So if inflation expectations, if this part of the survey goes up at all, that's not going to be good. That's the one thing the Fed always says, and really has not changed, that inflation expectations, they haven't been going up. But if they did, that would be the worst thing you could see, because inflation expectations feed into actual inflation. So if these numbers go up, it's not going to be a good day in the stock market tomorrow. Good thing is it comes out at 10 o'clock in the morning. So if you're holding calls or you're holding puts right now, as long as you're up in the morning and able to be, at your trading program on your brokerage, on your phone or your computer or whatever, then you'll have a time to get in or out of trades that you are in that you don't want to hold, because I firmly expect the Michigan consumer sentiment inflation expectations part will move the markets big, especially after what Fed Jerome Powell just said. Now, on the earnings front, you don't have much for today. You are going to get Enphase and Chipotle in after hours. That's pretty much it. Tomorrow, pre-market, Uber, CVS, Health, Wendy's, Dominion Energy, Yum, Under Armour. And that is basically it. Tomorrow in after hours, Walt Disney, Affirm, Robinhood, MGM Resorts, Goodyear, O'Reilly Auto Parts. Disney will be important. Affirm, I think, will be important. Robinhood, maybe. Some of these companies are semi-important, but you're kind of out of the important part of earnings season. Earnings season, it was good and it was bad, right? A lot of companies came in line with expectations. Some were under expectations, but would, raise guidance, right? So you've seen a lot of mixed earnings, not quite enough, I think, to get you that market crash. I think the data is what could push the markets down starting tomorrow and potentially over the next couple of weeks if it continues to come in super good. So that is going to be all for this video. We'll be back at 4 o'clock to talk about everything else you guys need to know, take a deep look into the technical analysis and what is coming with AMC stock. So hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.